The US Treasury has taken an unprecedented step in Iraq, marking a significant shift in international financial oversight. They have established a permanent presence within Iraq's central bank, embedding themselves deeply into the financial heart of the nation. This move is not just symbolic. It represents a tangible commitment to reshaping Iraq's financial landscape. It signals a deep intervention into Iraq's financial system, aiming to bring stability and transparency. American employees are now stationed inside the bank, working alongside their Iraqi counterparts. They occupy an entire floor dedicated to overseeing financial operations and ensuring compliance. Their mission is clear: to monitor and control the flow of US dollars, ensuring that every transaction is legitimate. This development has raised eyebrows in Iraq and beyond, sparking debates about sovereignty and foreign influence. It represents a significant escalation of US involvement in the country, extending beyond military presence to economic control. The move is a direct response to concerns about money laundering and financial mismanagement. The US believes that Iraq's banking system is vulnerable to exploitation, posing risks to both nations. They aim to tighten the reins and prevent illicit financial flows, ensuring a more secure and transparent financial environment for Iraq. The US Treasury is particularly concerned about dollar smuggling. Large sums of US dollars are being smuggled out of Iraq. They're ending up in neighboring countries like Iran and Turkey. This undermines the Iraqi economy. It also raises concerns about potential financing of terrorism. The US Treasury's presence in the central bank is designed to stop this flow. They will be scrutinizing every dollar transaction. They will be looking for suspicious activity. They will be working closely with Iraqi officials. The goal is to make it much harder to smuggle dollars out of the country. This intervention has put immense pressure on Iraqi banks, creating a challenging environment for financial institutions. They are caught between a rock and a hard place, struggling to navigate these turbulent times. On one hand, they have to comply with US demands, which are stringent and require meticulous attention to detail. Failure to do so could result in severe penalties, including hefty fines and potential closure of operations. On the other hand, they face resistance from within Iraq, where public sentiment is growing increasingly hostile. Some see this as a violation of Iraqi sovereignty, sparking protests and political debates. Iraqi banks are now subject to intense scrutiny, with every transaction being closely monitored. They are required to report any suspicious transactions immediately to avoid repercussions. They must provide detailed information about their customers, ensuring transparency and compliance. They are under constant pressure to prove that they're not facilitating money laundering or dollar smuggling, which adds to their operational burden. Section 4. A history of sanctions. This is not the first time the US Treasury has taken a hard line with Iraqi banks. In recent years, the US has imposed severe sanctions on several Iraqi banks. These sanctions were imposed for alleged ties to Iran. They had a crippling effect on the Iraqi economy. The US Treasury has shown a willingness to use financial tools to achieve its objectives. The current intervention in the central bank is a continuation of this policy. It is a clear message to Iraq: cooperate with us or face the consequences. The Section 5 Balancing Act for Sudan. Iraqi Prime Minister Mohammed Shia al-Sudani faces a delicate balancing act, navigating complex political landscapes. He needs to maintain good relations with the United States, a task that requires careful diplomacy. The US remains a crucial ally for Iraq, providing essential support. It provides military and economic support, which is vital for Iraq's stability and development. However, Sudani also needs to appease domestic audiences, who have their own concerns and demands. Many Iraqis are wary of US influence, fearing it undermines their national interests. They view the US intervention in the central bank as a threat to Iraqi sovereignty and independence. Sudani is trying to walk a tightrope, balancing international alliances with domestic expectations. He has publicly defended the US intervention, emphasizing its benefits. He argues that it is necessary to combat money laundering and stabilize the Iraqi economy, which is crucial for the country's future. However, he has also tried to reassure Iraqis that their country is not becoming a puppet state of the US, emphasizing Iraq's sovereignty and independence. Section 6. Implications for the future. The US Treasury's intervention in Iraq's central bank is a significant development. It has far-reaching implications for Iraq's economy and its relationship with the United States. The long-term consequences remain to be seen. One thing is certain: this move will reshape the financial landscape in Iraq. It remains to be seen whether this will be a positive or negative development for the Iraqi people. It will depend on how the situation unfolds in the months and years to come.